Hello and welcome to today's live webinar where we look at the ASX Opportunities in review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Up on screen's a graph of the NASDAQ, and I'll move through the US indices. We'll look at the XJO and then we'll jump into the recent ASX Signals and identify sort of the high conviction ideas. One of the big drivers in the US equity markets continues to be the above average earnings growth in the technology sector, but there are some concerns around the PE valuations, in particular in the FANG names, and we discussed that last week where they're trading at 120 times earnings. So the market started to get a little bit concerned there, and we saw a sell-off in the NASDAQ, but in the last couple of days of last week that's rebounded quite quickly, and it looks like we'll probably go up and retest these prior highs there on the NASDAQ. What I've done here is gone into my watch list. I've gone down to my custom list. This is where you can add any symbol you want to your own list. You simply select custom list, use this window here, type the code in, hit enter, and it adds it to the watch list. If you want to remove it, you can use the rubbish bin over there on the right. I've already set this up. So we'll go back to the charts and we'll just move on to the next one in my list. Which is the US S&P 500. Now, before I go into the trends or the data there on the S&P 500, I'm just going to bring this into screen and discuss the earnings with you. So at the end of 2017, the average earnings per share for S&P 500 companies was running at around $150 or $147 of earnings per share. If we look at the history of that, in 2012 it was running around 110, and then by 2014-15 it started to plateau at around 120, moved sideways for about 18 months, 2 years, and then during 2016 and 17 it accelerated, and then obviously in 2018 we have the benefits of the tax cuts starting to flow through. You've got S&P 500 companies aggressively buying back shares, which at the margin helps. So the forecast here at June 30, which we're just about to see US earnings get underway, and we'll see confirmation of what it looks like for the June quarter. But the expectation is that the market's going to deliver earnings there that will average about $170. And then if we look out into December 2018, the market's looking for the further growth of maybe another 8% on top of where we are at the moment to deliver total earnings of around 177. So what does that mean on a PE basis? So if we have a look at this, this is the historical PE of the S&P 500. So we can see in prior bubble times during 2099, 2000, traded up to around 23 times earnings. During the GFC, got down to around 10, 11 times earnings. And then here we are. We did get a little expensive there, up at around 18 times. And then with the earnings accelerating and the market moving sideways, we've seen that PE adjust back to more normal levels. So when we look at the S&P 500, we've spent the most part of this year really consolidating and moving sideways. And the real test now for valuations is going to be these upcoming US earnings. So over the course of the next few weeks, that'll be part of the focus of the Monday recordings, is just to have a look at how those earnings are unfolding relative to expectations. Looking at the Australian market, well, first of all, the Dow Jones, very similar, tracking sideways. And the relevance of just having a look at these indices is when we do cover a recording on the US market and we look at the Dow 30 or the S&P 100 stocks, we'll be able to tie it back in and think about it from a PE standpoint and what the indexes are doing as well. The local market here, the XJO, continues to make higher highs and higher lows. The most recent high or low was 61.74. So if you were trading indexes or hedging portfolios, you'd be cautious if the XJO traded back below 6174, and at that point you'd want to be thinking about being short the index, short futures, buying put options, something to hedge your portfolio. Within the Australian market at the moment, a fairly quiet week on the earnings calendar at the moment. The following Tuesday, we start to get into the production numbers for the major resource companies. So Oil Search on Tuesday, BHP Wednesday. CIMIC deliver their half-year earnings next Thursday. So that's one we'll be watching, as that's been one of the high conviction ideas that we've presented. South 32, we had the recent algo buy signal. So just looking at these, we had algo buy signals in Rio. We've had a recent one in South 32. And obviously the energy names still sit in the model portfolio. So we've got production numbers from those energy companies. Sydney Airport, their traffic numbers, Iluka. So you get the idea that really over the next couple of weeks, it's a fairly heavy calendar around production numbers within those resource names. And then at the beginning of August, we then really get into earnings season. Okay, so from here, let's jump into the watch list. We'll go down. Let's select recent ASX signals. And again, this stores the last 7 days of signals. And we click on the first code in them and we move through these. Now, some of these stocks are outside of the group that I focus on. I tend to focus top 50, top 100. So some of these I'll skip past, but maybe just make a minor comment on. So we can see here high, low, supported around $2. Not a stock that I cover. ANZ, the Australian banks have rebounded as the market and international investors have chased yield. As money's come out of the Asian markets, has come into the Australian market and been allocated to the banks. Given that they're oversold and international investors chasing yield, I think this rally that we're having at the moment is probably within 5% of topping out and creating a new lower high formation. So for example, here on ANZ, I'd think somewhere between $29 and $30 we see this run into resistance and actually move lower again into the back half of the year. A lower high pattern there in that name. ETFs, so a couple here just to keep an eye on. This is an Ishares product, looks to be creating a higher high and a higher low there at around $28, so you can maybe just make a note of that and come back and revisit that after. Buru Energy here, minor support at around 28 cents. The momentum indicators turn positive. Not really a stock that I cover, but certainly a higher low structure there for you to have a think about. Likewise here, support maybe around $3. Algo Signal, the momentum indicator is still a little bit negative, but looks like it's turning and ready to move into an upward trajectory. CBA, so along with all the banks, we've just started taking profit today on CBA. Now, this stock was in the model portfolio. It was the last of the big four banks to be in the model, and we've now had a sell signal, so it removes the CBA from the model. And it's interesting when we look across sort of the whole spectrum of the bank names and bank ETFs that we're now facing these sell signals. So that tells me we're pretty close to the top of the recovery in these bank names. CSR, I think this is getting oversold. I was always a little bit cautious on the entry level to this name, given that it's exposure to domestic housing. And I think generally investors are probably a little bit cautious on the Australian housing market at the moment. CSR management came out and reaffirmed that FY 19 earnings are going to be the same as FY 18, so it's really a dividend yield story. The stock's now trading on about 4.5% dividend yield, so some reasonable support there, but you want to be picking it up at an oversold condition. So if we have a look at what's happening here, I think this is very early support and it may rally off there, but I think it's a name that you're probably better off scaling into the position, because I think in a soft market there is downside risk back to around $4. But keep an eye on this. Watch the momentum indicators. Even here at $4.50, I think it's looking oversold and should start to run into some dividend yield support. High, low here, supported around 46 cents there. Ishares Asia. So Asian indices are down anywhere from 10 to 20% this year. So there's been heavy selling in China, likewise Hong Kong. This particular ETF is an iShares product. It gives you exposure to 50 of the largest cap stocks in Asia. I think maybe Asia's probably a little oversold at the moment, so there is an opportunity here. So I'm happy to have a look at this on the long side at $82, $83, and looking for that support level there to hold if you're looking to add exposure into Asian markets. Another ETF that I suggest you just make a note of is the Ishares a global 100. So this gives you exposure to 100 of the largest market cap stocks in the world, and it's hedged, so you're not going to face any currency deterioration in your position. At 105 thereabouts, we've had an algorithm buy signal there, and looking for that to hold support and move higher. iShares Japan, so not one that I invest in too often, but just flagging that we've had that algo buy signal there as well. Iron Mountain, not doing it there at the moment, but certainly breaking down. It's created a lower low, taken out this structure here, rallied back, and we're starting to see volume come in on the highs there, which suggests that maybe that's nearing a top. Now, InvoCare, this had been a stock that we had that the algorithm had done very well in through originally entering in 2016 there around 1268, continue to make higher highs and higher lows, and then recently the stock started to break down. This low's taken out the prior one, so we get a little bit cautious, and I think somewhere between where we are at the moment, $14, and this price gap back here to $15 is probably an area where you'd want to be looking at exiting InvoCare for the time being, and waiting for the next sort of 6 to 12 months to unfold, where the stock actually starts to make a higher high and a higher low. And I think the long-term fundamentals here are strong for InvoCare. So we just got to be patient, wait for the next algorithm buy signal, and then look to add that back into portfolios. But at the moment, I think sort of within that sort of $14 to $15, it runs into resistance. Not doing here on this one. Live High, not really a stock that I follow. It's a little like a smaller version of the Seek style business. I don't really look at the financials here, so it's hard to get a read on sort of where support is at the moment, but the stock's still got a fairly strong structure in place, but certainly this momentum here continues to look weak. And yes, need to watch these shorter term momentum indicators for them to turn positive as an entry level, and then you need to be running a stop loss on a smaller cap stock like that one. Linus Corp, so support here at around $2. And just flagging that we've had the algorithm buy signal there off that $2. So again, you'd want to be running a stop loss below that. MNF, not doing there, just lower low, lower high. So this was a short signal there, or a closing out of the long signal. So here we go, the MVB. So this is the Market Vector Australian Bank ETF, one ETF product or one investment giving you exposure to the banking sector on the ASX. The lower high formation here, it is at around 2870 thereabouts. And I think where we sit on the individual bank names is that they're within sort of 5% of their highs. So if we bring that across to this ETF, we'd likely think that sort of between 28 and maybe 29.30 thereabouts, 29.40 should be the top. So maybe we just shift that up a little bit more and say 29, and we'll have a look at this next week again. But certainly somewhere between where we are at the moment. Let's get this into place. So we're likely to think within that range, this bank ETF runs into resistance there. Not doing here on this one. Perpetual. So Perpetual struggled with outflows from their managed funds, and the stock fell from $57 down to low or high 30s. And if we have a look at it, had been in an algorithm buy condition, and then it started to flag the lower high formation here at around $55, and the stock's really sold off. It's had another bounce back. We're getting another confirmation of lower high with volume starting to pick up at that highs. So looking at sort of where the stock broke down from last time, you can say, well, there's support. So if we bring that across, again, we'd be likely to sort of think that somewhere within this range, Perpetual probably runs into resistance again. So between this $43 and sort of $46 range, we'd expect these algorithm indicators or the momentum indicators here to turn negative, and Perpetual. So I don't think the issues that Perpetual face are resolved. So it's still interested in that on the short side, or cautious of that. Currency as a commodity basket ETF here, buy at around $9. I think that's worth keeping an eye on. Sort of more traditional way to play the commodities here with Rio. We've had the sell-off from $87 back down to $78, and we've just started adding Rio into portfolios. I think given sort of where commodity prices are at the moment and that flattening growth trajectory in US equities, buying Rio and selling covered calls, capturing the upcoming dividend is our preferred strategy there. 7 Group Holding, not really doing too much here in this name, but just flagged that around 1850 you've got a higher low formation there. Westpac, so again, interesting that we're seeing these sell signals pop up in the bank ETF, in the individual bank names, but certainly the last lower high pattern there in Westpac was around $30, 20 odd cents. We're pretty close to that at the moment. I'm quite sure that the banks are within a small margin of running into resistance and trading lower. And then there we are, back to the beginning there. So I think all these we've covered. Yep. So again, to revisit that, go into your watch list, go to the drop down here, come down, select recent ASX signals, and toggle through those names. Now, let's just revisit the high conviction ideas that we've looked at. HealthScope. We like this name, looking for it to find support between this sort of 215 and 207 level. Certainly more of a longer term investment there, HealthScope. James Hardie, I'll just revisit this. Trades on a high PE, delivering double-digit earnings growth, exposure to the slightly faster growing US housing market, owning it here, selling covered calls, is something that we're comfortable with. Tabcorp, now this has been one of the high conviction stocks. We've had the algo buy signal down here at around 420. It's now rallied 10%, going up to 470 thereabouts. They report their earnings result on the 8th of August, and it'll be the first 6-month result combined with Tats Group, and I think that's likely to surprise the market to the upside there. CIMIC Group reports their earnings in another week. If you want to make a note of it, CIMIC reports their earnings on the 19th of July. And we're looking for double-digit earnings growth here in CIMIC. We've been buying the stock sort of in the low 40s. Haven't sold call options over it yet. We'll probably just leave it and see what this upcoming earnings result looks like. IPL was a name that we've been promoting and really taking profit in this at the moment. We think the last price gap that it had up here to 374, it's filled that at the moment, likely to run into resistance. JB Hi-Fi, cautious on these retail names, so I just sort of bring this to your attention as a point of discussion, that it's in the algorithm model portfolio, and I have a preference over JB Hi-Fi over Harvey Norman, and we're just watching to see whether this support level here at $22 holds. Link is one that I discussed previously. We've seen it rally off that $7 support, trading sort of $7.50. Just keep this on your watch list. I don't think there's a need to buy it today at this price, but if we see weakness in the market over the next week to 2 weeks, and you see it back at around $7, I think that's good long-term value there. Another stock I suspect is good long-term value here is Star Entertainment. The Chinese put $410 million into it at $5.30 a share only a few months back. The upcoming August earnings result, I think, should surprise the market to the upside. CSR, which we covered earlier, so I won't look at that one. Spark Infrastructure was one that I'd highlighted in the prior weeks. That's already rallied from 220 up to 240. I don't see upside potential much above sort of $2.50 at the high end. Okay, to conclude today, let's jump into the model portfolios and just have a look at sort of what changes we've seen. So what I do, select model portfolios, go across to the drop down. Let's have a look at the first one in the list, which is the top 20. Get all these columns can sort in ascending or descending order. Get the least number of days to the tops, given that I'm interested in seeing what stocks most recently been added, just in case I've missed something. South 32 was added only 14 days ago. It's up marginally. Prior to that, Rio, which has been in the portfolio a little over a year, that's up 37%. And then we've got BHP up 42 and so on. So interesting that we're down to only 7 stocks in the model portfolio at the moment. So by historical sort of average, that's a low number of holdings. So indicating that there's a large number that are still got a bearish structure in place. Good to see that from a performance standpoint, we don't have a stock in the top 20 model that's in negative territory. If we go down the page a little bit, we can have a look at the recent sells. So we just make sure the most current sell date is at the top, which is the 6th of the 7th, which was CBA. And that was removed only for a marginal gain, but obviously if we see the bank sectors roll over, we'll be pleased that we're not holding any of these bank names. Amcor was closed out, a little marginal as well, as was Westpac. ANZ delivered better returns, Transurban certainly better. Then as we get down there a little bit further, South 32 was probably the best investment of over the course of this year, realizing 51% and so on. So that's the top 20. Quick look at the top 50 and see if anything recent's been added. South 32, James Hardie, which I've discussed. Computershare, I think this is a little bit expensive, so you probably want to wait for that to pull back a little bit further before you add that into the portfolio. The energy names have really done well. Santos Oil Search up 31% and 23%. The other strong performer in the models being Qantas up 27%. The underperformers are clearly AMP and Fortescue, so we're looking for those to turn around. And if you're looking for discounted names in the market with growth opportunities or recovery opportunities, AMP and Fortescue certainly are at discounted levels. And then you can see the other stocks in the model. If we go down and see what stocks have recently been closed out, again, we make sure we've got the most current date at the top, which we now do. And you can have a look through there at the performance of the stocks that have been closed out. That was the top 50, top 100 days held. So Downer EDI, South 32, I think we've cut. Well, let's just have a look at a couple of these stocks. So I've gone into top 100 and we're just having a look at the most recent names that have been added. So South 32. So we can see here higher-low formation at $3.50. The algorithm buys signal. The shorter-term momentum indicators look like they're starting to turn positive. South 32's mostly traded sideways over the last, say, 6 months. We do have a higher high and a higher low. So we've been adding South 32 back into client accounts and we haven't sold calls over it as yet. Downer EDI. Don't mind this name. The more I look at the financials for this, it looks like they're going to grow earnings around 10 to 12% over the next 12 months and probably at a similar rate into 2020 financial year. So I think there is some reasonable upside, and I suspect Downer EDI breaks out of this consolidation range here where sort of $7 or $7.25 has been resistance. I think Downer EDI can trade up into that sort of $7.50 to $9 range over the next couple of years. So momentum should favour Downer EDI. Healthscope, we've looked at that one. So I think this develops as a support area for Healthscope. CSR, we've looked at that. So just jumping into Computershare. So I think this name's oversold. The original buy signal was back here at around $16, and I'll be waiting for it to come back and test that level before I looked at adding that back into portfolios. Star Group, I've brought that one to your attention. I think you need to add that to your watch list. Tabcorp, we continue to like that coming into the earnings result. Crown, another one coming into the upcoming earnings result. I think this here, what's likely to surprise the market is the level of cost cutting and cost control that Crown has exercised, given that they've exited their international side of the business, and I think they've taken a far more disciplined approach to the domestic businesses. So with the Aussie dollar being low, it should be supportive for inbound tourism and international spending. Crown at the margin should be a beneficiary of that. Medibank Private, so this is one if you're looking for cash flow in your portfolio, buy this and sell out of the money, slightly out of the money, covered calls, collect the upcoming dividend, a combination of the call option and the dividends delivering 10% cash flow. So that's one that I think you should be thinking about. AMP, oversold, higher risk, but over the next 6 months the company's likely to break the business up and should unlock value for shareholders. BHP, we continue to like. So what I suggest you do, log into the software, toggle through some of these lists, and obviously make sure you've made notes on the stocks that we've covered today that are high conviction. And I look forward to chatting again soon. Thank you.